Stop everything. Big money news just dropped, and it's going to change where you bank. We are talking about a massive $7.4 billion bank takeover that is shaking up the entire country's financial map. The Columbus, Ohio powerhouse, Huntington Bankshares, just swallowed up Cadence Bank, which is based down in Texas and Mississippi. This is not some small, boring deal. This is Huntington making a colossal grab for the American South, setting the stage to become a huge player, and you need to know why. Huntington is known as a super regional bank. Think of them as the really big guys, but still way smaller than the Wall Street Titans like Bank of America or JP Morgan Chase. These super regionals are desperate to get bigger so they can actually compete with the giants. Huntington is currently running over 1,000 branches across 14 states. Cadence, the bank they just bought, has about $53 billion in assets and over 390 locations stretching across 9 southern states, covering Texas, Florida, Georgia, Alabama, and more. When this whole deal closes, get ready. We are looking at a brand new, massive financial machine. The merged company will instantly become a top 10 bank in the United States. We're talking about a bank with about $276 billion in total assets. They will be sitting on roughly $220 billion in deposits and holding about $184 billion in loans. This move expands Huntington's reach to 21 states, stretching all the way from the Midwest down to Texas and across the South. The CEO of Huntington called this move an important next phase of growth. And he's right. They are targeting the absolute fastest growing parts of the country. What markets are they buying into? They are getting a foothold in massive, high growth cities like Houston, Dallas, Fort Worth, Austin, Atlanta, Nashville, Orlando, and Tampa. Listen to how much power this gives them. Once the merger is complete, Huntington will be the #1 bank in Mississippi by deposits. They will also rocket up to a top 10 spot in Alabama and Arkansas. And crucially, in Texas, where everyone wants a piece of the action, they will become the 5th largest bank by deposits in both Dallas and Houston, and the 8th largest across the whole state of Texas. This is how you change the banking game overnight. Now, for the big question, what does this mean for you, the everyday customer? The good news is that Huntington says they're keeping the Cadence branch network exactly as it is. They say they plan no branch closures and instead intend to invest and grow the existing locations. This means your local Cadence branch, which will eventually operate under the Huntington Bank name, should stay open. Cadence customers are also going to get access to some of Huntington's famous consumer products. They call this their fair play philosophy. This means features like 24-hour grace periods on overdrafts and things like standby cash and early pay. This is Huntington trying to blend the local, community-focused banking Cadence was known for with the massive muscle and digital products of a much larger bank. Huntington has a plan to continue Cadence's legacy of community support through local partnerships and investments across its footprint, especially in communities like Tupelo, Mississippi. Cadence was known for being a community-based, relationship-first bank, and Huntington promises to keep that local approach while bringing their full range of capabilities to the table. Now let's talk business and why investors are watching closely. This entire deal is an all-stock transaction. Huntington is issuing 2.475 shares of their common stock for every 1 share of Cadence common stock. Based on the market price before the announcement, that values each Cadence share at about $39.77, which was a nice bump up or about a 9% premium for Cadence shareholders. For Huntington, they are expecting this massive acquisition to boost their earnings per share by about 10%. They also raised their profitability targets, saying they now aim to a return metric, which basically tells you how well they use their cash to make profit, to be between 18 and 19%. That's up from their old goal of between 16 and 17%. They expect to save about $365 million in costs once the integration is done. But here's the drama. When the news hit, Cadence stock went up, but Huntington stock actually fell by about 4%. Why? Simple. Investors get nervous about big mergers. They worry about the massive job of putting two huge companies together without messing things up, a risk called integration risk. In fact, some law firms are already raising flags. They're investigating whether Cadence's board got the best possible price for its shareholders in this $7.4 billion deal. It is totally common to see this legal noise after big mergers, but it adds pressure. On top of that, there are serious concerns about Cadence's past lending practices. Reports show disparities in mortgage lending just last year in 2024. In Mississippi, Cadence made over 4 loans to white applicants for every one denial. But for African American applicants, that ratio dropped severely. They only made about 1.5 loans for every one denial. The picture was similar in Alabama, where the bank made over 4 loans for white applicants for every one denial, compared to about 2 loans for African American applicants for every one denial. These are the kinds of numbers regulators and the community watchdogs are going to be scrutinizing closely as this huge merger goes through. This whole deal is part of a giant wave of bank consolidation happening right now. Regional banks feel squeezed. They need scale to handle the tech costs and to compete with the biggest names. Huntington's CEO even said he thinks there will be more deals coming in the future because the regulatory environment is currently supportive of mergers. Just look at the other recent action. Huntington just finished buying Veritex, another Texas-based bank, for about $1.9 billion, and their Ohio rival Fifth Third Bank recently announced their own major merger to buy Comerica for about $11 billion. Plus, PNC Financial announced a $4.1 billion acquisition of First Bank in Colorado. Everyone is scrambling to get bigger, and the entire banking landscape is reshaping right before our eyes. The Huntington and Cadence deal is expected to close in the first quarter of 2026. Then the full conversion and rebranding will happen in the second quarter of 2026. This is a monster transaction that gives Huntington a massive footprint across 21 states, huge assets, and a much stronger shot at taking on the Wall Street giants. It's all about scale, market presence in high-growth areas, and driving higher profits. The big question now is whether they can execute this giant plan flawlessly. If you want to stay ahead of these monumental shifts in the financial world and understand where your money is going, hit that like button, make sure you subscribe to the channel so you don't miss the next huge deal, and ring that bell for notifications. Thanks for watching. I'll catch you next time.